Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage the risk. I'm your host, Jim Matthews, reporting from Chicago on what is a fall-feeling day. It's no longer 80s in October. It's back to 50s and 60s. That's what we're talking about. It's playoff baseball weather, it's football weather, it's harvest weather, and we're going to get into that here in a moment. But first, joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jay Kingsley, and from way down in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl, no doubt Prather. Team, how are we today?
I'm doing pretty well this afternoon, Jim.
Verl?
Enjoying the weather down here.
Yeah, well, all the way down there. How is it down there in Atlanta?
Oh, it's nice. About just shy of 70 degrees. Had some cooler nights here too. Free AC, you might say.
Yeah, that's right. We'll take it. It's nice to have some windows open. Absolutely. It is feeling good. Folks are rolling. Folks are out there working, right? We're getting a lot of harvest done here. We don't know the USDA's take on harvest progress because the government's closed, but we'll get to that here momentarily as well. First, though, Lexi, if you would please kindly timestamp the broadcast. It is Wednesday afternoon, about 10 after 3 here in Chicago. We did have the grain and feed markets close slightly higher today when what have been very narrow ranges on very light volume, but the corn market did manage to close up 2.25 cents at 422 for December futures. That December wheat market was just up half a cent at 507 and a quarter, still maintaining that $5 mark for December wheat. We had Novi beans up 7.5 at 1029.5, and December meal, that stubborn little byproduct, was up 110 at 278 even. So some products here in terms of grain and feed up just slightly, but nevertheless some green screens, if you will, on this light volume. And I'd say, Verl, the government shutdown, which started 7 or 8 days ago now, we've had some pretty tight ranges here in the marketplace. Feels like traders are somewhat indecisive in terms of where are they going to take this thing, right? There's a lot of bearish news out there in terms of what's happening with this plentiful harvest at this time of year. Pace should be picking up. We don't know because we don't get those Monday NASS reports in terms of the harvest progress at the moment. But perhaps the bulls are arguing, well, hold on 1 second. There's probably some pretty good demand out there from export sales, but we don't know about that either because we're not getting those reports from the FAS on Thursday mornings. And then some would say, well, maybe the funds are covering their net short position, but we don't have these CFTC's Friday afternoon commitment to trader data. So there's just a lot we don't have. We also normally, Verl would have said, hey, it's the day before WASDE report. Let's do some bold predictions at the end of this episode. But there's no WASDE tomorrow. So there's just a whole lot going on, but also a whole lot not going on. And therefore, volume's light, ranges are tight. And what are we going to do now, Verl? I guess what thing we do know, at least, are the folks that we speak to directly. We know that just from your network, Verl, working on the buyer relations side of the grain and feed industry, talking to those folks, getting a gauge of how maybe basis activity is looking like on the cash side of things. So what is your take this week, Verl, as we are in the second week now of a government shutdown?
Yeah, well, Jim, I don't know. It gets kind of dangerous when there's no data coming out from the government. Us traders are kind of left to our own devices. And I don't know, that could be a good thing. That could be a bad thing. Depends on what side you're on, I guess. You know, the rumor is, or the word on the street is that it doesn't take too much driving around to get confirmation. Soybean harvest has gone incredibly fast this year so far. And we're starting to see some folks switching over to corn in a heavier fashion here. We've heard all kinds of different numbers as far as yields go on soybeans, some really good, some a little bit disappointing. So it'll be interesting to see what USDA's take is on yields when they do come back to the table here. The corn that's starting to come out of the fields now, some of the later matured stuff over in Iowa, sounds like it looks a little better than the earlier stuff that was really heavily pressured by disease. Here in Illinois, it sounds like it might just be the opposite, right? We ran out of moisture in August. Some of the earlier stuff was able to fill out very well. Some of the later stuff might be a little bit lower than the first stuff. It'll be interesting to see where all that kind of shakes out. But yeah, I mean, fresh fundamental data is lacking, as you mentioned, but the cash market has really kind of continued to keep things pretty interesting, especially when you look at this soybean market. I mean, nearby delivered basis for soybeans in St. Louis at One River Terminal went from -32 last week to a +13 on basis. And for those without a calculator at home, that's a 45-cent swing in 1 week. It's kind of unheard of, right? And there's a lot of kind of speculation from traders on why this is taking place. Some believe that, hey, there's just been too much carry built into this market. Soybean harvest is wrapping up, and oh shoot, the producer found somewhere to stuff all these soybeans. And now the market's trying to pull some of these beans back out. The other side of the trade thinks that maybe, just maybe, there's some fresh demand going on at the Gulf. You know, that is an interesting theory, especially, I mean, if you look at the way the market's handling here as of late. I mean, we've seen the carry from November to January futures narrow about 4 cents here in 3 days worth of trading. Today, we had November futures finally close above this pack of moving averages that we've been struggling to get above here near term. So, you know, it'll be interesting to see on the backside of this thing where we actually shake out.
Yeah, and Verl, I would say, you noted we do rely very heavily on this government data, and so I would say, first of all, to everybody out there, this is why you might work with the likes of Verl and Jake on the Grain and Feed Foundations programs here at Everag, because you are then getting this inside scoop in terms of what's happening in the physical markets here in the Midwest, because like we said, we don't know the actual pace of export sales at this rate every Thursday. We don't know if we are receiving some larger flash sales come through, if we're getting really decent buying opportunity on the bean side, but it does sound like, at least on what you've reported, Verl, there's demand there somewhere. So is it just truly trying to pry these beans from the U.S. farmer, or is there a stronger end user that is hoping to import these beans at some point here this fall? I think, Verl, as we talk about that bean situation, 1 week ago, as we recorded the grain feed, right, we coming into a government shutdown, things were trending lower. I mean, beans were in that 980 type of figure. Corn was hitting 410. President Trump then suggested via social media that he's going to work out a deal with the Chinese. But now there's also these rumblings that we might be, distributing funds to our soybean farmers from the U.S. government. Can that happen when the government's closed? Right? There's so much speculation in the bean market in terms of what's happening. But what is clear is that clearly the funds have decided to at least de-risk a little bit, right? Beans have made a pretty decent move from last week's lows up towards here 1030 now at the board. You've noted how Nove has now gained a little bit, of an edge in terms of that spread versus, Jan and March delivery. So really interesting to see what the U.S. farmer is going to do with their soybeans. Are they maybe holding on to a little bit just in case we've got a deal in the works for this fall? Or is this why we're seeing basis move up? Because it's hey, we need to get a hold of this stuff. Time for you guys to let go and move on from here. So really interesting. Verl, before we turn to Jake, have you noticed similar tendencies on the corn side of the market?
We've seen small improvements as far as river basis goes, especially when you look for like November delivery periods. But right now, it seems like we're really just ramping up on corn harvest. And I don't expect to see a heck of a lot of improvement here, at least for the next couple of weeks. We did see in areas that got some rain, kept some folks out of the field, a little bit of appreciation at some of the processing facilities, but it's short term stuff.
Gotcha. Good deal. Okay. Thank you, Verl. We appreciate that. Now, Jake, as we roll it over to you on the feed buying side of this industry, hearing what Verl has to say about some of these shifts in the soy complex, to hear about the soybean side of this and to hear about some of this, basis activity. Are you seeing any of this reflected then on the byproduct side, Jake, in terms of how protein and soybean meal, that byproduct from crushing soybeans, is being offered anywhere, or from a potential export demand standpoint? Is there any changes to protein here?
We really haven't seen a lot of influence on soybean meal or other proteins in the feed space at this point. I think we've seen since the beginning of August that crush margins really have contracted quite a bit, probably when our basis values for most folks bottomed out. But at the end of the day, without the export program there and a continued, still healthy crush margin and pretty steady soy oil values, soybean meal futures remain under pressure, and we continue to advise folks to take advantage of that while it's there. So, not much of a response from the feed side of things as far as protein is concerned. But what Verl was talking about there, with kind of a perk up, a very healthy rally in some soybean basis values in very specific markets. That's something that we've been monitoring and are concerned with as far as corn buyers are concerned. So you'd mentioned, Verl, that we're really just now ramping up on corn harvest here. And what we've been advising folks to do is to have aggressive bids for basis out to their vendors, because it feels like over the course of the next 7 to 10 days, maybe 2 weeks, you'll really hit peak harvest. And then you'll get over that halfway mark, 2/3 of the way through corn harvest. And at some point in there, you should see some pressure on basis if you're going to see it. And then once they get, 2/3 of the way through harvest, you start to wind down enough of these combines that lines at the elevators thin back out, and basis starts to probably appreciate a little bit as they try to keep stuff flowing to the market. So trying to catch a dip somewhere between here and there. And it feels like, again, maybe there's a 10-day window to get that done and get your Octave Dece or even your October to March stuff bought. Still feels like there's a big enough crop in the carry in the market there. Doesn't force you to go out and buy everything through September. But if you don't do it here in this nearby window, you probably don't get another good look at it again until after the first of the year. Typically, the bin doors get closed up at harvest, basis creeps up, futures kind of get into a little bit of a stall until we know more about the South American crop late January or early February. And that's about the time that, if we're going to see another breakdown in cash values, it's going to come at that point in the calendar. So trying to be aggressive and take advantage of opportunity if it presents itself here in the next week or so, and be prepared for that.
Okay. And I think it has been really interesting, Jake, because we did talk about President Trump's suggestions on social media about working out a deal with the Chinese. We saw beans run what if now, I think they're 40 cents off the lows of last week. So quite the move. Verl noted how we've moved through a couple of these key moving averages that might have been providing some resistance. When you look at meal, though, and you look at how corn has really moved at the board, just not quite the same gusto, right? I think in that 40-cent rally for beans, meal's really up like $7 or $8 per ton from that rally. Corn, even given today's close, is up about 11 cents from where we were trading prior to that announcement. So it's a move, especially when in corn, the range we've been stuck in now for quite some time, 11 cents over a week, I guess, is a wide range, but largely it hasn't done a lot. I would also say for December corn futures, we are still pushing up against some of these moving averages that the November bean market at least had a chance to push through. So it'd be interesting to continue to track those from a technical perspective. Jake, before we let you go, anything on other feed products that you'd like to note before we wrap up?
Yeah, I think just kind of a quick roundup here. So we talked about cottonseed pretty extensively over the course of the growing season, and it feels like it has retreated back to some of the prices we saw very early this spring before there was so much concern about a reduced acreage number. Those folks have made it through their production season. They just got to get it out of the field at this point. I think you could see another drift lower as ginning season gets up and running and more product is available, but we're not talking about a $50 or $100 breakdown in price. I think, again, veg oil values are strong enough that crush margins, those cotton seed crushers will be buying up quite a bit of seed. Feed demand domestically has been pretty static over the course of the last 24 months. So demand hasn't really gone anywhere, and they'll be able to store some of that stuff through the winter and try to push it out at a premium later next year, depending on how that crop does. Cotton futures are very unimpressive, not going to entice a whole lot of acres next spring again. So we could be in for a second round of what we've just dealt with. A couple other ones, I think, just with harvest going, we're starting to maybe see a little bit of pressure on things like distillers and gluten and soy hulls, some of those byproducts that come out of those processing facilities as they get access to plentiful bushels here in harvest. So taking advantage of buying a little bit of that here in the short term, not a big concern for those prices to run a whole lot higher from here, but also they're down close to some seasonal and historic lows that worth entertaining getting a chunk bought out through early 2026.
Okay, very good, Jake. Thank you for that. Thank you for that roundup there. Very much appreciated. And thank you to Verl for returning to the grain feed. Great to have your insights as always, Verl. Much appreciated.
Thanks for having me.
Absolutely. We would also like to thank the Evrag Insights crew for their support. A big thanks to Lexi for her production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.